Hi there, welcome to kneppyinvests. Time for another Appendix 5B September quarter report, and this time from a company called West African Resources. It's not too difficult to understand where this company has their operations. It's in Burkina Faso, which is in Western Africa. Now, the reason why this company is quite interesting to me is the amount of cash flow they are producing in their operations per quarter. For the September quarter, that equaled $100 million. Yes, they produced $100 million in operations for one quarter, yet they have a markup of $1.2 billion, which seems a bit low for a company that potentially is producing $400 million of cash flow for the full year. Previously, I have included West African Resources in a group video, but this is the first time I've had a dedicated video for this company. So let's get stuck into it and talk about what this company actually does. I've already sort of given it away, but a few more details I think need to be given. West African Resources is a gold producing company. They haven't been producing gold for that long, a few years, if that. They were founded in 2006 and listed on the ASX 11th of June 2010. The CEO and founder of this company is a guy called Richard Hyde. He also has a 2.2% stake in the company. I'm fairly impressed with his credentials, not because of his past before West African Resources, but simply what he's done with this company over the past 5 years in particular. He's really taken this company to the next level. The major shareholders of West African Resources include some fairly significant major world funds, including Van Eck, which has a 9.8% stake, BlackRock 1.3%, and the Sovereign Fund of Norway, the Norges Bank, 1.1%. The markup of West African Resources is $1.2 billion. That's at a share price of $1.40. They have been in trading halt because they have made an acquisition, and that share price was before they started trading again. And the ticker code for this company is WAF. West African Resources went into production March 2020. We do have 18 months of financial data for this company. And here I am showing you the last 12 months of the trading 12 months of financials for West African Resources. Revenue, $519 million. Operating cash flow, almost $200 million. And again, the markup of this company is $1.2 billion. Profit after tax at $168.4 million. Gross profit margins pretty good at 53.9%. Net debt at $12 million, and that net debt has been decreasing quite significantly since they have gone into production, and they're almost net cash. In fact, they could be net cash after the release of the September quarter results because they've been still producing prodigious amounts of cash in their operations. And as we have a look at the valuation metrics, they do seem quite low. EV to operating cash flow at 6.1 and PE ratio of 7.1. There is a bit of a discount to this company. For the first reason is they are a commodity producer. So there are a lot of investors out there who refuse to buy into commodity companies simply because they are price takers. But you still can get a lot of value out of them. And I think the other reason there is a bit of a discount to this company is simply because where their production is, where their mine is in Western Africa, just because of that sovereign risk, you do have to put into a bit of a discount there, not a premium. A lot of investors do prefer their mining companies to be in less risky places like Australia, Canada, USA, those sort of places, not West Africa. Now, another thing, an advantage of having a production or having a mine in West Africa is the all-in sustaining costs for their mine was something like $690 per ounce, which does seem fairly low, although I'm not an expert on all gold mines, but that number does seem fairly low. So if we do even see a massive drop-off in the gold prices, this mine is still going to be profitable. And that's another exciting thing about this mine is the all-in sustaining costs seem to be quite low. What I've been doing recently in these Appendix 5Bs or 4C videos is comparing the previous quarter Appendix 4C or 5B to the current one. So I've been comparing the June quarter results to the September quarter. What I'm going to do now is actually compare year-on-year quarters, and that means going back to the September quarter of 2020 and just see how the company has progressed over the year instead of only just the last 3 months. So for West African Resources, they were in production, just started production after this quarter, just before this quarter. Receipts to customers, $114 million, and they were operational cash flow positive by $39 million. They began this quarter with 83 million and finished it with 102 million, so they were building their cash during this quarter. But the one thing they didn't do was pay any debt. And by the end of this quarter, they had $293 million of debt. And because they have a fair bit of debt, the interest payments to service those debts was $5.5 million. They also spent $7.4 million on capital expenditure. Now, just remember some of these numbers: net debt 293 and the operating cash flow 89 or 38.9. So let's compare that to what happened in the September quarter for 2021 for West African Resources. As soon as I saw West African Resources September quarter Appendix 5B, I was quite impressed with some of these numbers. Receipts to customers over $200 million for the quarter, and they were operational cash flow positive by $110 million. This is for one quarter, not a whole year, for one quarter. And the market cap of this company is only $1.2 billion. My first thoughts were, if they can continue those sort of numbers over the part next year, this company is significantly undervalued. But I did a bit of reading, and it does look like the gold production will trail off over the next few years. So I don't think they will have these sort of quarters in the future, but still they will be operational cash flow positive by a large amount over the next few years, which will build up their cash even further from where it is now. And for the quarter, they increased their cash by almost $70 million from $60.9 million and finished the quarter with $130 million, even though they did pay down $25 million of debt to $142.3 million. That means over the past year, the debt has decreased from $300 million to $142.3 million. And because they have $130 million of cash, debt $142, that means they're almost net cash, not net debt. In fact, there was some commentary from the company that they are now net cash 1 month after the end of the September quarter. As we look at the receipts and operating cash flow history for West African Resources, 6 months of history here going back to when they went into production in March 2020. Great timing because that was around the COVID-19 financial panic. But you do see receipts and operating cash flow going up through time here. That's one thing I do look for. Now, this is a mining company, so I do have to be a little bit mindful that more than likely we won't see receipts continue to climb and operating cash flow continue to climb from here. There was a bit of, I think in one of the presentations, they did mention that they do expect production in their West African mine to start falling from here on in. But still, $110 million of operating cash flow in one quarter does seem a bit high for a company that's valued at $1.2 billion. Now let's have a look at the debt and cash for West African Resources. I do like to see debt coming down through time, or better yet, a company not to have debt or too much debt. When as West African Resources went into production, they had $343 million of debt. You can see those numbers in the March quarter of 2020, and debt has decreased from that $343 million to $142 million. So it's decreased by $200 million over the last 6 quarters. Not only that, cash on hand has actually increased from $80 million to $130 million. That means the net cash or net debt for this company has improved from $262 million to $12 million, and they are net cash right now as I speak towards the end of October. That's exactly what I want to see a company like this doing, paying back debt, becoming net cash, that sort of thing. And they are achieving that as we speak, or as I speak. Just want to talk quickly about the acquisition West African Resources did make. They went into a trading halt on the 26th of October to announce this acquisition. And the reason they went into trading halt is because they were doing a capital raising. Not completely sold on the reasons why they have to do a capital raising, because they are producing a lot of cash in their operations. Maybe they could have funded this acquisition through their operational cash flow, but they are raising something like $126 million to not only pay for this acquisition, but also to pay down some of their debt. I'm still not completely sold this was the right course of action for the company, but management have decided that this is the right course of action. And because I am quite impressed with the management over the past few years, who am I to question what they do? And to be honest with you, not only am I impressed with what this company has done over the past 5 years, the market's been really impressed also. If we go back to the start of 2016, the share price of this company was around about 6 cents. Yes, 6 cents. Now, just after they've gone out of the trading halt, the share price has fallen from $1.40 to $1.28. But still, if you've been holding this company over the past 5 years, you cannot be anything other than thrilled by how this company has created value for you. Share price has been in an uptrend ever since then. There has been times where share price looks like it was falling into a downtrend, but the share price has been continually climbing. And we've also seen an increase in volume, particularly during 2019 and just as they went into production. In fact, when they went into production, we saw the share price rapidly rise from then. So maybe that would have been the best time to buy into this company when they went into production. Share price around then was around the 50 to 60 cents range and has doubled since then. So an awesome looking chart here. Exactly what you want to see for a longer term buy or a company to have in your portfolio. That's all I have for this Appendix 5B September quarter video for West African Resources. If you have any questions about this company or any other company on the ASX, I'd love to hear your thoughts, your opinions, your questions. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need to seek financial advice, make sure you find someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.